ટીમાં ચર્ચા કરીએ matrimony.comના ચીફ માર્કેટિંગ ઓફિસર અર્જુન ભાટિયા આપણી સાથે જોડાઈ ગયા છે. અર્જુનજી, good afternoon. Welcome to the show. And sir, first of all, we'll start with the Union Minister Ashwini Vaishnav had scheduled a meeting with the two sides on March 4. So what was the discussion over there and what's the solution?
Thank you for having me. Yes, the meeting happened last week where our Honorable Minister, Mr. Ashwini Vaishnav had called us. So the meeting was broadly to hear both the sides, which was obviously the Indian startups and Google on the issue. So the Honorable Minister heard us, and at the moment, the decision that was taken at that time, which Google also implemented, was that they bought back all the apps which they had delisted on post-March of this year. But since the matter is, under legal hearing right now, it's sub judice. So the interim relief that we have got is that the delisting has been reversed thanks to the intervention of government. Till the time the matter is heard and an order is passed by the Competition Commission of India and of course the Honorable Supreme Court.
Okay, so Arjun sir, next will be any update on proceeding in Supreme Court with regard to this matter?
Ma'am, the case is coming up for hearing on 19th March. So only after that we'll get some idea on what's going to happen further.
Okay. And sir, what's the revenue dependence on in-app purchases? What proportion comes from there?
We see India is a Android market. As you know, 95% of smartphones in India are on the Android ecosystem. So, the Indian startup ecosystem is heavily dependent on Android and the Play Store, which is Google's app distribution model. So in case of matrimony, it would be, extremely high, upwards of, I would say 75 to 80% of our revenue comes from specifically from Android apps.
Okay. And sir, can you quantify the impact of the Google issue in terms of profitability? Excluding this impact, what would profit margins look like and margins outlook going ahead?
See, ma'am, while this disruption happened for a couple of days, and of course, our apps were off the Play Store. So registrations for those 4-5 days, and we are still seeing some impact. New people registering or downloading the app, that went down significantly. So as of now, I can't comment on margins and all. Immediately, we are yet to see. There is still some, lagging effect which is still coming, and we are still recovering from that 4-5 days of disruption that happened. But only after a few days we'll really get to know the full impact that happened because of this disruption.
Right, sir, I can understand. And sir, any retrospect payouts pending to Google ahead and any provisions needed?
Yeah, so as per Google, the billing, the new billing policy which they had implemented is from April 2023. So there is a retrospective which is there. So now it all depends on what is the final outcome of the hearing, and accordingly we'll understand what's the impact for the previous year.
Okay, sir. And sir, court proceedings will take time. In the meanwhile, have you been considering alternate models, and what's the strategy ahead?
Yeah, so we are considering alternate models as well. So Google has basically given us 3 options. One is go directly with their billing system, which is extremely high, 15 to 30%. The other option, which is an alternate billing system, using other payment gateways or other modes of payment, is also significantly high. It is 11 to 26%. Whereas if any payment gateway, the market rates or what the market offers or works on any e-commerce platform or any digital to consumer platform is between 1 to 2%. So that's the whole gap. So that's the second option that they are giving. And the third option is we take payments from customer outside the apps. So the customer comes here, but if he wants a paid membership, he goes outside the app on another site which is ours and makes a payment over there. So these are the three options that they have given as of now. The first two options obviously don't work for startups where margins are not so heavy that we can afford 11 to 26 or 15 to 30% of our revenue going in commissions for payment. And the third option is also very suboptimal because asking customers to go out and make a payment is a lot of friction, and there will be a significant drop in payments for the entire ecosystem if something like that starts happening. So these are the three options right now broadly that we have. So we are looking at these options and seeing how can we make it easier for the customer and for our business to continue.
Sure. Next, sir, there is also talks about an alternative app store infra similar to ONDC and UPI. So how effective can it be, and will adoption be easier if it does happen?
See, ma'am, so first of all, it's a good initiative that the country along with government is taking, so that our dependency reduces from this monopoly which is there in the market right now. Currently, the biggest challenge is the discoverability of these particular app stores. With Android, what happens is whenever you are buying a new smartphone, the Play Store comes integrated within the smartphone itself. So discovering any app becomes very easy. It's a consumer behavior. Now, if you have an app store which is not coming shipped within your mobile phones, first of all, you have to discover that app store where the apps will be, and then download the apps over there. So that is a major hindrance which is there as of now.
Okay, and sir, few points on financial terms. Business outlook going ahead and a revenue run rate expected ahead. Also outlook on matchmaking and marriage services.
See, we are in typically Q4 is one of the best quarters from a seasonality standpoint. So definitely the progress is there in this quarter. Had this impact not come, obviously we would have been in a far better position. But yeah, this quarter seems to be going strong for us.
Okay, and EBITDA loss of marriage services, sir, has come down to 2.1 crore versus 2.7 crore. What is the EBITDA break even?
Sorry, ma'am, I didn't hear you.
Sir, EBITDA loss of marriage services has come down. That's to 2.1 crore to 2.7 crore. So, what is the EBITDA break even?
Ma'am, no. So on wedding services, there has been a lot of focus in the last couple of quarters in terms of improving our profitability and making it at least bringing it to break even. So yeah. I won't be able to comment on the specifics as of now, but yeah, there is a focus going on improving it now.
Okay, and sir, last question will be average transaction value had declined in Q3. What are the trends for Q4 and beyond?
No, so as I mentioned, Q3 generally is not a very strong period for matchmaking as a as an industry. So Q4 definitely we are seeing better trends when it comes to ARPU for us.
Okay. Arjun sir, thank you. You shared many details, and best wishes for coming quarters and the matter going on. Thank you, sir.
Thank you so much. Yeah.